Sticking with the days since headlines, Raubex has reported a decline in interim headline earnings, but the group says while performance reflects a decline compared to the prior 6 years, 6 months, it is still a solid performance driven by its diversification strategy. Raubex CEO Felicia Msiza joins us now with greater perspective of that performance. Felicia, thanks so much for your time today. As we get started, just characterize the 6 months that was for us. Despite softer revenue, softer earnings, you describe the period as solid. Take us through the reasoning behind that.
Good afternoon. Thank you for having us. Yes, so we believe that the performance for the first 6 months of 2026, we released a robust performance, obviously despite some isolated challenges that we experienced. And that is actually supported by strong performance from roads and earthworks and infrastructure divisions. These two divisions, they had a solid performance. They executed very well. They've been able to grow their revenue and operating profit as well. The construction materials division was unfortunately impacted by the adverse weather. We experienced heavy rains at the beginning of the year, around March, April, which impacted, our volumes in terms of aggregates, asphalt and bitumen. But these volumes, we didn't lose them. They've actually been pushed forward. And then thirdly, the materials handling and mining division, although we experienced some challenges within this division, some of the companies had a very strong performance. On the mining side, looking at Bauba, we delivered improved performance compared to the second half of 2025, and we are expecting further improvements in the second half of 2026. And obviously, another area where we had a challenge is Western Australia, where we were impacted by one single performing contract, but that contract has been terminated and the losses has been fully accounted for in the first half. So if you look at the results, most of our divisions performed well with most of our subsidiary companies, except for those few isolated challenges that I've actually spoken to.
Let's zoom in further on some of those divisions. I want to start off with looking at Bauba, especially with that new PGM plant coming online. When do you expect margins in the resources division to recover, especially as the tide has started turning when it comes to those PGM prices?
So looking at Bauba, let's start with Kookfontein because we've got two mines. Kookfontein is the open cast mine. So we had issues, obviously, around, geology resulting in lower grades and lower yields, which impacted production. So we've seen an increase in terms of commodity pricing, but unfortunately, due to, the production that was impacted, we could not benefit from that. And you're correct in terms of the PGM plant that has been commissioned in August this year. And obviously, we are expecting a benefit into the second half of 2026. So in terms of our revenue and profits, we're going to see an uptick from the PGM plant that has been commissioned.
And just looking at that unit in Western Australia, where you spoke about the contract being terminated and that one of the factors weighing on earnings over the past 6-month period, how have you fared there broadly, right? And what are your expectations when it comes to project activity moving forward?
So we've been operating in Western Australia for the past 8 years, and we have delivered solid, performance results over the years. Unfortunately, now we experience this loss-making contract. It was a very difficult contract. Our teams worked under very difficult circumstances. But as I said, we are now offside. That contract has been terminated. Losses fully accounted for. And obviously, there are claims on the table currently that we're discussing with the client. And should we be successful with those discussions, we should be able to see an upside in the second half of the financial year. And I must emphasize that this is a once-off incident.
Okay.
Obviously, we have done a post-mortem. We have looked at, what went wrong, and we have actually put in processes to address those issues. But when you look at Australia as a whole, I mean, the rest of the contracts within Raubex Construction Australia, they are performing exceptionally well.
Okay.
Our other subsidiary company, Westforce Construction, is also performing exceptionally well, and the other two companies as well. So if you look at Australia going forward, our strategy hasn't changed. We still continue operating as a tier 3 company, but we're also making sure that we mitigate the risk going forward.
All right, and quickly before I let you go, let's look at that unit that continues to perform well, the Roadworks unit. There's been major upgrades on the roads over the past year or so, and I've noticed a bit more roadworks in Joburg in the lead up of the G20 summit. Has the ramp up in roadworks filtered through to Raubex, and how are you managing capacity there to keep delivery on track?
So this division, Roads and Earthworks, they had a stellar performance in the first six half. And most of the contracts that we're executing is contracts that, we tendered for years back. So our major flagship projects in KZN has actually come to an end. And we've replaced some of that work with some of the new contracts that we have secured from Sunroll and also from concessionaires as well. So in terms of capacity, we're executing well. Our clients are quite happy with the quality of the work that we are delivering. And obviously, if you look at the order book, we're sitting with a record order book of just above 30 billion rands. And the majority of that order book is sitting in this division. So we continue to, get work, but also we execute seamlessly. You look at the profit margins as well. It speaks to how we actually execute.
All right, let's leave it there then, Felicia. Thanks so much for your time and sharing your insights with us today. Now, that was Felicia Msiza, CEO of Raubex.